How to file returns for tax in Nigeria by employees, self-employed individuals, and unincorporated entities. A comprehensive anatomy and professional guide. Dear friend, recently all the subnational tax authorities comprising the 36 states and FCT have been issuing notices requesting employees, self-employed individuals, and unincorporated entities to file their returns with them on or before 31st March 2026. These notices presupposed that the concerned taxable individuals or unincorporated entities had registered for tax with them and have activated their tax ID or payer ID, and where they have not, should do so accordingly, as registration for tax and obtaining national tax ID or state payer ID is a precondition for filing tax returns. No tax or payer ID, no tax returns. Many educators have published the process of filing income tax returns, but most have not educated or explained to you very clearly what filing tax returns by employees, self-employed individuals, and unincorporated entities really means. The approach is like a person who plucks a ripe mango without really knowing what mango is all about, its nature, characteristics, so that you can predict it and know the best time to pluck and get a very fresh mango. That is part of why Task Corp is different. Our Task Corp, we insist on giving you the basics about each subject so that you can boldly and confidently confront anybody on tax issues, including tax officers. Why? If you have a good idea of what the particular tax subject is, nobody can intimidate or bamboozle you. You know the basic principles, applicable law, and then the practice of tax, so that on your own, you can decide who, what, where, and how to deal with the various tax subjects. For instance, tax is not imposed on your balance at bank or on capital, but on income or profit. Consequently, in this video, you will learn all that it takes to file tax returns by employees, self-employed individuals, and unincorporated entities, amongst others, with a relevant tax authority. Nigeria Revenue Service, State Internal Revenue Service, or the Federal Capital Territory Internal Revenue Service, effectively and efficiently. This video is long. You have to exercise patience because it is a comprehensive dissect that includes a step-by-step process for filing various tax periodically. So, what do you have to do? Simple. Just follow us attentively to the end of this video. In addition, we'll be releasing more videos. And to get the videos hot and fresh, kindly like, subscribe, hit the notification button, and share to as many people as possible to your loved ones so that you can also benefit. Also, let us know what you think of this simple process in the comment section. Thanks. So, what are you going to learn in this video? You're going to learn the following. First is the golden rule of tax freedom. Second is the golden rule of tax returns by individuals and unincorporated entities. You're going to learn the fundamental meaning of tax returns. You're going to learn the benefits and advantages of tax returns. You're going to learn the key consequences of not filing tax returns as and when due. You're going to learn the key types of tax returns in Nigeria. You're going to learn the income tax returns. What is the legal basis? You're going to learn persons obligated to file tax returns, and you're also going to learn persons not obligated to file tax returns. You're going to learn the two types of tax authorities in Nigeria, the primary precondition and instrument for filing tax returns in Nigeria, contents of income tax returns, individual tax returns, and Form a comprehensive anatomy of Form A, employers' annual employee emoluments and pay tax return Form H1, remittance of income tax return Form G, withholding tax returns, value-added tax returns, tax incentives return, miscellaneous matters in tax returns, requirements for filing tax returns, how to file tax returns, a step-by-step process, some tips for effective and efficient tax returns, the list of the 22 interdependent compasses, about tax corp and the authors, then some samples of tax return forms. Now, you're going to know the golden rule of tax freedom. Dear friend, do you want to be free from tax wahala? No disturbance of your sleep by a taxman. No knocking at your door by a tax lady. No receipt of long queries by your business from a tax controller. No receipt of unsolicited reminders or threats by your company. No blocking of your bank accounts by the tax chairman. No debiting of your bank account at the directive of a tax authority. No barging into you or your business by law enforcement officers. No forceful entry into your business premises by tax officers and law enforcement officers. No threat of imprisonment by a law court. No selling of your business and or its assets without a court order after the tax has become final and conclusive by the Nigerian Revenue Service. Dear friend, if your answer to the above compound question is a capital yes, then obey the golden rule of tax freedom. And you ask, what is this golden rule of tax freedom? I will tell you, it is called the three C's. And what are the three C's? It is comply, comply, and comply. Now, the golden rule of filing tax returns by individuals and unincorporated entities. The golden rule of filing tax returns by employees, self-employed individuals, and unincorporated entities is that an employee, a self-employed individual, and other individuals shall file their various tax returns in the subsequent month or year with relevant tax authority, whether or not they earned income or is liable to tax, except as expressly exempted by the Tax Act. In this way, all taxable individuals, whether they are employees, self-employed individuals, and unincorporated entities, and whether or not they earn income or are liable to tax, should file returns with the relevant tax authority, except as expressly exempted by the Tax Act. In this way, employees, sole traders, market traders, businessmen, businesswomen, freelancers, online entrepreneurs, business names, enterprises, NGOs, religious organizations, incorporated companies, ETC, are supposed to file their various tax returns to the Nigerian Revenue Service or the relevant state internal revenue service or the Federal Capital Territory Internal Revenue Service. Now, the fundamental meaning of filing tax returns in Nigeria, the fundamental meaning of filing tax returns in Nigeria. Filing of tax return in Nigeria is a mandatory legal process by which an individual or business entity provides and submits required documents and information to a relevant tax authority as a formal declaration of all the incomes, deductions, allowances, and reliefs applicable to the taxable person for a preceding month or year in compliance with the tax law. The relevant tax authority could be the Nigerian Revenue Service in the case of incorporated companies, non-residents, members of armed forces, employees of the diplomatic mission or corps, or a state internal revenue service, including the FCTRS, in the case of resident employees, and resident unincorporated taxable persons. There are various types of tax returns, please take note, and they include income tax returns, withholding tax returns, value-added tax returns, tax incentive returns, priority and non-priority products returns, surcharge returns, VASP returns. Now, what are the benefits and advantages of filing tax returns as and when to? Which give you the benefits you can get by filing your tax returns as and when due. First, obtains commendable compliance with the requirements of the Tax Act, complies with tax law and discharge tax law obligations, obtains statutory capacity to obtain tax clearance certificate, avoids imposition of presumptive tax based on judgment tax by a tax authority anyhow, avoids severe tax sanctions and penalties, including imprisonment, be in the good books of the tax authorities, promotes good citizenship and governance, prevents tax audits and investigations by tax authorities, prevents business disruption by tax authorities and enforcement officers, prevents the strain and sale of business and its assets by tax authorities, prevents reputational damage that could be very costly to you. Now, what are the key consequences? The flip side. What are the key consequences of not filing tax return as and when due in Nigeria? What are the offenses and penalties? Section 101 of the Nigerian Tax Administration Act 2025 states that a taxable person who fails or refuses to file returns or knowingly files incomplete or inaccurate returns to the relevant tax authority in accordance with the provisions of this act shall be liable to pay an administrative penalty of, please watch this, the person shall be liable to pay an administrative penalty of 100,000 naira in the first month in which the failure occurs, and 50,000 naira for each subsequent month in which the failure occurs. Illustratively, if you fail to file returns for 3 years, say from 2026 to 2028, the cumulative administrative penalties will be as follows. In 2026 alone, it will just be 3.9 million. By 2027, it would have grown to 11 million naira. And by 2028, it will fly to 18.3 million naira and more. And note this penalty is only for not filing tax returns. Amongst other consequences, you cannot obtain tax clearance certificate, which you require for your business transactions, travels, holidays, etc. Now, the key types of tax returns. They are taxable persons, basis periods, periodicity, and timeline for filing tax returns by employees, self-employed individuals, and the unincorporated entities in Nigeria. Here are 5 columns. The first column is type of tax return. The second column is taxable person. The third column is basis period. And the fourth column is periodicity. And the fifth column is timeline. So we are going to list out the types of tax return, and we'll tell you the taxable person, the basis period, periodicity, and timeline. The first one is employee annual income tax returns, which you do by filing Form A, by completing and filing Form A. So who is the taxable person? It is the employee that has to file this particular employee annual income tax return. The basis period is the preceding year, and the periodicity is annually, and the timeline is that you have to file it before 31st March of every year. Please take note of this because this is very important for employees. Every employee in Nigeria is supposed to file employee annual tax returns with Form A, and they have to do that before 31st March, which now has to end on Tuesday next week. The second tax return is self-employed individuals annual income tax return, the same Form A. Who are supposed to file this? Self-employed individuals, sole traders, market traders, freelancers, self-employed individuals, basically. Now, the basis period is preceding year basis. Periodicity is annual. And timeline again is 31st March. You have to file on or before 31st March. The third tax return, is employer tax return, which you have to use from H1. Who is to file? Employer. You have to file on preceding year basis, and it has to be annual, and you have to file on or before 31st January. So we presume that responsible employers would have filed their 2025 employer tax return as far back as 31st January. Another one, employer remittance return, Form G. It is employer that files. It files on preceding year basis, and it files annually, and has to file 31st on or before 31st January. Indeed, Form H1 and Form G are filed together. Then they have employee monthly payee return. This is also filed by an employer, and he has to file it on preceding month basis. The one for January, you file on February. The one in when you pay in February, you file in March. So periodicity is monthly. I had to file on or before 10th of every month. So when you pay salaries in March now, you have to file your payee return on or before 10th of April. Value added tax return. This is to filed by the supplier or collector of VAT, and it has to be filed on preceding month basis, and it has to be filed every month, and it has to be filed on or before 21st day of the subsequent month. Similarly, withholding tax return is supposed to be filed by the withholder and is on preceding month basis, and it has to file it every month, and it has to file it on or before the 21st of subsequent month. Then you have low income earners annual tax returns. This is supposed to be filed by low income earners, and it has to be filed on preceding year basis. And sorry, here it has to be filed on annual basis, and it has to be filed on or before 31st March. Now, income tax returns, like we said, there are various tax returns. So, just like you have income tax return, VAT returns, and withholding tax return, we mentioned them before. So, let's go to income tax returns. What is the legal basis for even filing income tax returns? We'll show you. With respect to income tax returns for individuals, the new Tax Act requires every taxable person, whether or not the person is liable to income tax or not, or exempt from income tax, to file income tax returns periodically as applicable, monthly, quarterly, annually, or some other timeline. Section 13(1) of Nigerian Tax Administration Act 2025 puts it this way: a return of income shall be filed in the prescribed form with relevant tax authority in each year of assessment and without notice or demand by one, every taxable person, whether or not liable to pay tax, and two, non-resident persons liable to pay tax in Nigeria under Chapter 2 of Nigerian Tax Act. Persons obligated to file income tax returns. Section 13(1) of Nigerian Tax Administration Act 2025 states that the following persons are obligated to file income tax returns in Nigeria. And they are: one, every taxable person, whether or not liable to pay tax, and two, non-resident persons liable to pay tax in Nigeria under Chapter 2 of the Nigerian Tax Act. The Tax Act requires every taxable person to file returns. Note that. So the natural question is, who is a taxable person in Nigeria? And Section 147 of NTAA 2025 comes to the rescue. Section 147 of Nigerian Tax Administration Act 2025 states that taxable person means person who carries out economic activity in a place, or a person exploiting tangible or intangible property for the purpose of obtaining income therefrom by way of trade or business, or an agency of government acting in that capacity. When we combine the definition of a person who is obligated to file tax returns in Nigeria and the definition of a taxable person according to the Tax Act, we arrive at a comprehensive, clear, certain, and simple description of who is obligated to file returns for tax in Nigeria as every person who carries out an economic activity in Nigeria, whether or not for profit or gain, is obligated to file returns for tax in Nigeria. Let me take this again. Who is liable to file tax returns in Nigeria? It is every person who carries out an economic activity in Nigeria, whether or not for profit or gain, is obligated to file returns for tax in Nigeria. Simply put, every person who carries out an economic activity in Nigeria, whether or not for profit or gain, is obligated to file returns for tax in Nigeria. We will show you what exactly constitutes an economic activity herein. In the meantime, we arrive at the above description of who is obligated to file returns for tax in Nigeria from the following provisions of the Tax Act and commercial practice. An economic activity by commercial practice is a broader activity which includes production, distribution and consumption of goods or services to earn a living or satisfy human need, including the exchange of money for goods or services. Please note that an economic activity is different from a business activity, which is the specific subset of economic activities that are aimed at making profit or gain. Consequently, while all business activities are economic activities, not all economic activities are business activities. Persons not obligated to file income tax returns in Nigeria. We have seen persons who are obligated to file income tax returns in Nigeria. Let us now look at those who are not obligated to file income tax returns in Nigeria. Broadly, the following person is not obligated to file income tax return in Nigeria. A person who does not carry out an economic activity in Nigeria, either by actual means or derivative means. Take it again. The following person is not obligated to file tax return in Nigeria. Please note that a person who does not carry out an economic activity in Nigeria, either by actual means or derivative means. Persons not obligated to file income tax return in Nigeria includes persons who receive upkeep funds, such as students, dependent persons, such as the elderly or challenged persons who do not earn income, persons who receive reimbursement of out-of-pocket expenses, persons who receive pocket money, a non-resident person who derives only passive income from investment in Nigeria. The two types of tax authorities and their taxable persons in Nigeria. It's important you know your tax status and the authority which is responsible for taxing you. There are two tax authorities in Nigeria. The first is the Nigerian Revenue Service, which operates at the national level. Get it again. The Nigerian Revenue Service, NRS, which operates at the national level. Then you have the State Internal Revenue Services, which operate at the subnational level. Now, the Nigerian Revenue Service covers two types of taxable persons. They are incorporated companies and corporate entities and others. Under incorporated companies, you have limited liability companies, public liability companies, PLC, and corporations. So, under corporate entities and others, you have educational institutions, religious organizations, churches and mosques, charitable organizations, cooperative societies, associations, clubs, non-resident employees, members of the armed forces, and employees of the diplomatic corps. Now, those under the subnational tax authorities are divided into two, and they are individuals and non-individuals. Non-individuals, you also call them unincorporated entities. Individuals are also divided into two. There are employees and there are non-employees, which you also call self-employed individuals. And employees we're talking about here, we're talking of resident employees, not non-resident employees. Take it again. We're talking of resident employees. Self-employed individuals include sole traders, market traders, partners, freelancers, consultants, contractors, families, executors, and trustees. All these people are under the jurisdiction of the subnational tax authorities. Now you have the non-individuals, the unincorporated entities, and they include business names, surveyors, accounting firms, law firms. You have enterprises, you have sole proprietorships, you have partnerships, nano businesses, micro businesses, small businesses, and medium, which are not incorporated. All of you are under a particular state internal revenue service. The primary condition, the primary precondition and instrument for filing tax return in Nigeria are registration, national tax ID, and state internal revenue state payer ID. The primary precondition and instrument for filing income tax returns in Nigeria is registration for tax with relevant tax authority and obtaining a national tax ID or a state internal revenue service payer ID. This is because it is only the National Tax ID or State Internal Revenue Service payer ID that you can use to interact or correspond with your relevant tax authority. You cannot communicate with a tax authority without an ID, without a tax ID or a payer ID. If your tax status happens to fall under the tax jurisdiction of Nigerian Revenue Service, you have to first of all register and obtain the national tax ID. On the other hand, if your tax status happens to fall under the tax jurisdiction of a state internal revenue service or the federal capital territory internal revenue service, you have to first of all register and obtain the payer ID of the subnational tax authority. Contents of income tax returns by employees and self-employed individuals. Recall that Section 13(1) of Nigerian Tax Administration Act 2025 states that with respect to income tax returns for individuals, that every taxable person shall file income tax returns. Section 13(2) of NTA 2025 goes further to state the contents of the tax returns. Please pay attention here. You have to know the contents of the income tax returns. Indeed, Section 13(2) of Nigerian Tax Administration Act states that the return required to be filed under this section shall contain the following: a duly completed self-assessment form, the amount of income from every source. Take it again. The amount of income from every source, not just employment income, for the year preceding the year of assessment, computed in accordance with the provisions of Nigerian Tax Act or any regulation meant under the Act. 3. Personal relief and tax computation. In the case of income earned from trade, business, profession, or vocation, an audited financial statement or estimate of account attested to by the taxpayer, and evidence of payment of tax due. The filing employee or self-employed individual has to assess themselves by themselves, and this is they do by completing a self-assessment form, declaring their income from every source in the preceding year, stating their personal reliefs, showing tax computation, and the audited or attested financial statement and evidence of payment of tax which they have calculated. So once you assess yourself, just pay that tax first of all. Later, the tax authority can now review, and if you paid less, they will ask you to pay additional tax, and if you paid more, they will credit or refund your money. Employees and self-employed individuals, personal income tax return and Form A. Why self-employed individuals are called businessmen or women and are popularly deemed to earn income from multiple sources. Most employees are popularly deemed to earn income from only one source, their employment. However, some employees do earn income from multiple sources. They hustle, they do side businesses, they do some businesses to augment their salaries and live good lives. They drive boats, Uber, and all that. They do some side businesses to augment their salaries so that they can live good lives. Consequently, Section 14(3) of NTAA 2025 states that notwithstanding the provisions of subsection 1, an employee shall file an annual return of income from all sources, including employment income, in accordance with Section 13 of this Act. This means that employees should file returns annually as individuals. Please take note, because some people say employees don't file returns. No. At the end of every year, you have to file your annual returns with Form A, because you are likely to earn income from other sources. But even if you don't earn income from other sources, please, you have to file your annual tax returns, and you have to do this before 31st March of each year. Employees and self-employed individuals file their return of income annually by completing and submitting personal income tax return Form A. You can do it online or you can do it offline, but preferably online. Then you have here a comprehensive anatomy of Form A and a guide on how to complete it correctly. So here we're dissecting Form A and we're breaking it down for you so that you can clearly understand it. Form A is broadly divided into four sections as follows. You have Part A, which deals with personal details. Part B, statement of income for the preceding year. Part C, benefits in kind. Part D, allowances for life assurance, gratuities, NHIS, and pension contributions. In Part A, you will fill in your personal details such as your State Internal Revenue Service or FCTRS payer ID, full names, email address, and phone number, and other personal details that may be required. In Part B, you will fill in the incomes you earned in previous year. Say incomes earned in 2025 for 2026 tax returns from any of the earned income sources as follows. Earned incomes, trade, business, profession, or vacation. And you have to attach copies of audited or attested account for the previous year. Employment income, which includes salary, commissions, bonuses, allowances. You have to upload and attach pay slips as evidence of your employment income. Pension, annuities, and gratuity. You have to state the name and address of the employer or payer. Income received in or brought into Nigeria. You have to provide details. Unearned incomes, that's income from investment. Dividend from Nigerian companies, which are franked investment income or final tax and therefore not subject to further tax. But you have to enter the gross amount before tax deduction. Dividends from outside the country. You have to enter the gross amount before tax deduction. Interest. You have to attach a list showing gross income and tax deducted for each source. Rent. You have to attach a list showing gross amount, expenses, and tax deducted. Then income in respect of other profits not specifically stated on Form A. You will state that. Spouse, employment, and children's personal details for married individuals only. If you're a married person, you have to provide the full names, date of birth, employer or business name, employer or business address, and occupation with respect to your spouse. Similarly, you have to provide the full names, dates of birth, names and addresses of educational institutions, child's income on own rights, and school fees for each of your children. In Part C, you have to provide details of any benefits in kind provided for you by your employer in the preceding year for rent, domestic servants, vehicles, and others. In Part D, you have to provide details of any contributions you made annually for a life assurance on yourself or that of your spouse, including contributions for gratuities and pension schemes. You are warned that Form A should be completed to the best of your knowledge and without any falsehood or incorrectness, which could be very costly to you and incur sanctions and penalties. Thereafter, you declare and sign the form and you go on. This Form A should be completed and submitted to the relevant tax authority online or offline on or before that first March of each year, including this March we are in now. See Appendix A for sample of Form A. You can also download it. Employers' annual employee emoluments and pay tax returns, and the medium for returns. Employers' annual declaration and certificate from H1. This is from H1, which you use for making returns. An employer uses for making returns of the annual payment to staff. On or before 31st January of each year, the Tax Act requires every employer, please note this, every employer, incorporated and unincorporated entities to file employers' employee emoluments and pay tax returns, showing all the emoluments paid to and pay tax deducted from each employee in the preceding year. Section 14.1 of NTA 2020 puts it this way. An employer shall file a return with the relevant tax authority for all emoluments paid to its employees, not later than 31st January of each year, in respect of all employees in its employment in the preceding year. Please note that employer means incorporated and unincorporated entities, meaning that limited liability companies, business names, enterprises, NGOs, etc. are supposed to file Form H1. See Appendix B for example of Form H1. Contents of employer's annual tax return. Section 14.2 of Nigerian Tax Administration Act 2020 says that employer's return shall disclose for each employee gross emoluments, including allowances and benefits in kind, total deductions, net emoluments, and tax deducted. Form H1 is intended for the employer to provide full details about the emoluments and payee tax deducted from each employee. Consequently, the form is structured into 4 sections as follows. Section 1 is for employee personal information. Section 2 is for employee details of earnings. Section 3 is for employee details of reliefs. And Section 4 is for employee details of deductions. In Section 1, the employer provides each employee's State Internal Revenue Service or FCTRS payer ID and full names. In Section 2, they provide total emoluments earned from both the current and previous employment in the preceding year. In Section 3, they provide details of the employee eligible deductions, such as National Housing Fund contribution, National Health Insurance Scheme contribution, and life assurance contributions, rent paid, and loan interest for owner-occupied house. In Section 4, the employer provides details of the total tax, that is payee, deducted from each employee in the preceding year. The employer then declares and signs Form H1. Employer's remittance of income tax return. Employer's remittance Form G. Deducting correct payee tax from employee is one thing, and it is good though. However, remitting deducted tax to relevant tax authority is another. Consequently, the Tax Act requires that along Form A, employers should file employer's remittance Form G as evidence that they have remitted deducted payee and withholding taxes. See Appendix C for sample of Form G. Form G is structured into 8 columns, and they are: column 1 is month, column 2 is date of remittance, column 3 is tax type payee, column 4 is tax type 2 withholding tax, column 5 is channel of remittance, column 6 is channel reference number, column 7 is total amount of tax remitted, and column 8 is for official use. In the month column, enter each month, that is January to December or the previous year. In the date of remittance column, enter the date you remitted the payee or withholding tax. In the tax type 1 payee column, enter total amount of payee tax which you remitted in each month. In the tax type withholding tax column, enter the total amount of withholding tax you deducted from individuals and remitted to the relevant State Internal Revenue Service in each month. In the channel of remittance column, enter the channel which you used to pay. In the channel reference number column, enter the channel reference number or the treasury receipt number. In the total amount of tax remitted column, add columns 3 and 4 for each month and enter the sum in this column. Enter the grand total and also state it in your certification space. Leave the last column for official use. State the name of your organization. Enter preceding year. Enter ground amount remitted and sign off. Every employer is required to submit Form G and Form H to relevant State Internal Revenue Service or FCTRS on or before 31st January each year. Withholding tax returns by self-employed individuals and unincorporated entities in Nigeria, the legal basis and requirements. Section 28 of Nigerian Tax Administration Act 2025 states that every person who has an obligation to deduct and remit tax under this act or any other tax regime shall render monthly returns to the appropriate tax authority as specified in the regulation issued for that purpose. Section 22 8 of NTA 2025 exempts small businesses from collecting, deducting, or withholding tax as source. Yes, small businesses are exempted from collecting, deducting, withholding tax as source. The key information schedule for filing withholding tax return is the withholding tax schedule that shows particulars of withholdees and details of amounts withheld from them. The timeline for submission of returns and remittance of tax withheld is 21st day of the subsequent month in which the tax was deducted or withheld. Please do it earlier to avoid forgetfulness and attendant penalties. Don't wait for 21st day of the following month. If you can submit your withholding tax return by 10th, it is better for you. Value added tax returns by self-employed individuals and the unincorporated entities in Nigeria, the legal basis. Section 22(1) of Nigerian Tax Administration Act 2025 says that a taxable person shall, in respect of value added tax, with or without a notice, and whether or not an economic activity has taken place, submit a return to the service in the prescribed form on or before the 21st day of the following month. So, for that, whether you do business in a month or not, you must submit your VAT return. So, it could be nil because you didn't do any business, but you have to submit your VAT return. Other related provisions of the Tax Act with respect to VAT include where the service grants an extension of the period for filing the returns under this section. Such extension shall not imply the extension of time to pay the tax. The return shall contain the input tax paid, output tax collected, and value added tax payable in respect of all taxable suppliers, all taxable suppliers in the preceding month. The provision of Subsection 1 shall not apply to a small business. Simply put, a small business is exempt for filing monthly VAT returns. Recall that the Tax Act states that a small business is a business with an annual gross turnover of no more than 100 million, with total fixed assets of below 250 million. However, a small business may, subject to a written notice as read to the service, choose to opt out of the exemption granted to small business under this part, including registration, charging of tax on its taxable supplies, and filing of returns. A business upon ceasing to be a small business shall file monthly VAT returns. So once you grow beyond 100 million, please note that you have to start filing immediately. In determining whether a person meets the threshold of being a small company, the value of the following taxable supply shall be excluded. Supply of a capital asset of the person, supply made solely as a consequence of the person selling the whole or part of his business. A taxable person granted exemption in Section 4 is exempt from the provision of Sections 105 and 107 of this Act and Section 152 of the Nigeria Tax Act. So what does this mean? These provisions relate to deduction of tax as source and payment of VAT. So a small business is exempt from deductions as source and VAT. So the tax incentive returns by self-employed individuals and unincorporated entities. Remember, the Tax Act is a very good one. It gives so many tax incentives. But when it gives you the tax incentive, the government wants to know how you are doing. So you have to submit tax incentive returns to government. Section 27 of NTA 2025 says that all taxable persons enjoying incentives administered by the relevant tax authority, including incentive provided under Chapter 8 and Section 60 of Nigerian Tax Act, shall, in addition to annual tax returns, submit annual tax incentives returns to the relevant tax authority in the form prescribed by the service covering income tax and any incentive other than those which are generally available to all taxpayers. Simply put, you have to submit tax incentive returns. In the case of annual tax incentive returns filed by individuals, the tax authority in each state shall, within 60 days from the end of the due date for filing of the annual tax return, transmit to the service the annual tax incentive returns filed. The service shall, while submitting its annual report to the minister under Section 26 of the Nigeria Revenue Service Act 2025, include the summary of the returns received under subsections 1 and 2. Now, here are miscellaneous matters in tax returns. Income tax returns by low-income earners. Due to its peculiar nature and characteristics, low-income earners who operate in the informal sector are a special breed of taxable persons. Consequently, the Tax Act states that they should be treated specially with caution. Section 15 of NTAA puts it this way: notwithstanding the provisions of Section 14, a relevant tax authority may issue guidelines for the filing of simplified income tax return by low-income earners or persons operating in the informal sector. It is based on this special treatment that the Minister of Finance recently signed the 1% presumptive tax regulations framework for the informal sector. To buttress the importance of low-income earners and the informal sector in our economy, we quickly dissected the minister's framework and published the attendant video. Please go to our YouTube channel, TikTok, or Facebook and watch the video. Fiscalization policy and tax returns. Very soon, probably before the close of 2027, every business will be e-invoicing compliant. Is your company or business working towards that, or do you want to be caught off guard? The choice is yours. It is important to be ready and comply. For now, Section 23 of NTA 20 says that where the service deploys an electronic fiscal system, any person making a taxable supply shall use the EFS for recording and reporting all suppliers. Taxable persons shall be responsible for maintaining accurate records of all transactions passing through the EFS. The service shall specify the fiscalization system to be adopted and a transition arrangement for its implementation. The service shall issue a regulation to give effect to the provisions of this section. Please remember, when the Tax Act says service, it refers to the Nigerian Revenue Service and not to State Internal Revenue Service. Virtual Asset Service Provider, VASP. Section 25 of NTA states that a taxable person engaged in services related to exchange, custody, or management of virtual assets as a virtual asset service provider, VASP, shall, with or without notice, in addition to the returns provided in sections 11 and 13 of this Act, submit to relevant tax authority the information prescribed in subsection 2. The return shall contain a description of the virtual asset service, the date of the transaction, the type and value of the virtual asset involved, the sale value of the virtual asset, the name, address, telephone number, email address, and tax ID of the customer, including national identification number of the customer if he is an individual, the name, address, telephone number, and email address of the counterparty involved in the transaction, and such other particulars as may be prescribed by the relevant tax authority. Notwithstanding subsections 1 and 2, the relevant tax authority may at any time with or without notice request a VASP to submit further information in prescribed on a specified date. Information to be delivered by bankers. Please take note of this. Very important. Like we told you in our earlier videos, the tax authorities are rapidly and increasingly getting hugely empowered, strongly digitalized, highly connected, vastly networked, and heavily integrated. Consequently, you have to raise your game so as to comply effectively and efficiently. Tax authorities are now getting information about you and your business, including their deals, from numerous sources. So you have to be correct. With respect for one of the sources of information to the tax authorities, the Tax Act puts it this way in Section 29 of the Nigerian Tax Administration Act 2025. Without prejudice to Section 142 of this Act, every bank, please take note, Every bank, every insurance company, every stockbroking firm, or any other financial institution shall prepare with or without demand by the relevant tax authority quarterly returns to the relevant tax authority specifying the names and addresses of new customers and existing commerce. In the case of an individual, all transactions where the cumulative transactions in a month amount to 25 million or more. I take it again. They should provide the names and addresses of new customers and existing customers. In the case of an individual, they have to all transactions where the cumulative transactions in a month amount to 25 million or more. And in the case of a body corporate, all transactions where the cumulative transactions in a month amount to 100 million. So if an individual and your cumulative transactions amount to 25 million in a month, the act requires that your bank send information about those transactions to it. If you're a corporate body, then you are looking at a cumulative transaction of 100 million in a month. Disclosure of tax planning. For the purposes of paying lower taxes or the right tax, taxpayers and their tax advisor usually undertake proactive tax planning. But what exactly is tax planning? Tax planning is a legal and proactive process of structuring, organizing, and conducting your financial affairs to maximize tax efficiency and minimize tax liabilities. It involves leveraging tax incentives, deductions, credits, exemptions, and allowances provided by the Tax Act to optimize net income and tax payable, whilst ensuring compliance with tax laws. It is a tax avoidance and not a tax evasion process, which is fraudulent. However, the Tax Act puts a caution. Section 30 of NTA states that any person who enters or intends to enter into any transaction or agreement referred to as a disclosable transaction or agreement, whose principal purpose is a benefit which enables or might be expected to enable such a person to obtain a tax advantage, shall without notice or request provide to relevant tax authority information relating to that disclosable transaction agreement. In effect, the tax authority is saying that you should provide them with information about your tax planning. The relevant tax authority may make regulations specifying the information to be provided by a person in relation to a disclosable transaction or agreement, the form and manner of delivery of that information to relevant tax authority, the period of time within which the information referred to in section 1 shall be provided to relevant tax authority, and the administrative penalties for non-disclosure, false disclosure, incomplete disclosure, or late disclosure. Now, keeping of proper books of accounts. You can only submit proper returns from proper books of accounts. So it's very important that you keep proper books of accounts. And section 31 of NTA states that every person, including a company granted exemption from incorporation, shall, whether or not the person is liable to pay tax, maintain books or records of accounts. Very important. The books or records of accounts shall contain sufficient information or data of all relevant transactions for the ascertainment of the person's tax liability. The books and records required to be maintained under subsection shall be in English language and shall for purpose of tax be consistent with the format that may be prescribed by relevant tax authority. Where the record is maintained in a language other than the English language, the person shall, on demand by tax authority, produce or at his own expense a translation in English language which shall be certified by a sworn translator. So, books of account is very important. And if you don't keep proper books of account, the tax authority will have no other option than to assess you on base of judgment basis, or what they also call presumptive tax basis. Any book or record required to be kept under this section shall be kept for a period not less than 6 years after the year of assessment in which the income relates. So statute bad is up to 6 years. After 6 years, you can destroy your records, but you have to keep it for 6 years. Submission of audited financial statement and report. Similarly, the Tax Act enjoins every taxable person to prepare, audit, and submit proper financial statements with respect to his financial affairs to the relevant tax authority. I take it again. Similarly, the Tax Act enjoins every taxable person to prepare, audit, and submit proper financial statements with respect to his financial affairs to the relevant tax authority. Proper financial statement comes from proper books of accounts. Ownership of submitted returns. Section 32 of Nigerian Tax Authority 2025 states that a return, statement, or form furnished under this act or by on behalf of any person shall for all purposes be deemed to have been furnished by that person or by the representative of that person, unless the contrary is proved, and any person signing such return, statement, or form shall be deemed to be duly authorized and cognizant of all matters contained in the return, statement, or form. So you can submit accounts, and when they ask you a question tomorrow, you say, it wasn't you that submitted, but meanwhile you signed. So when you are filling your returns, please be very careful. Representation of taxpayer for purposes of tax returns. Section 33 of Nigerian Tax Administration Act states that for the purpose of compliance with this act or any other law, or a taxpayer may either represent himself or be represented by a tax agent accredited by the relevant tax authority. So you can represent yourself or you get an agent, but that agent must be accredited by the relevant tax authority. Requirements for filing tax return in Nigeria. The documents and other information required for filing returns for tax by an employee, self-employed individual, other individuals, and unincorporated entities are clearly stated on the tax return forms, and they include registration for tax. You can't file tax return without being registered, so you must have registered. Two, you have to have State Internal Revenue Service or FCTRL's payer ID. You have to have employment support documents, which include pay slips, details of allowances received, your bank statement, income from trade, business, profession, or vocation documents. You have to have your audited account or attested account. Investment income, that's dividend, rental income, and so on, documents. You have to show evidence of gross income and tax deductions. Total deduction, that is loss relief, capital allowance, exempt income, final tax income. You have to show computation schedules and evidence of receipt. Eligible deductions for National Housing Fund, National Health Insurance Scheme, life assurance contributions, rent allowance. You have to show evidence of payment. And evidence of payment of tax due, you have to show treasury receipts. How to file returns for income tax by self-employed individuals and unincorporated entities in Nigeria, a step-by-step process. In this section, here we have come to the actual filing of tax returns. So please pay attention as well. In this section, we'll look at how an employee or self-employed individual should file their income tax returns annually with their relevant tax authority. Individuals in Nigeria file annual personal income tax return from A with their State Internal Revenue Service or FCTRS by have to file it on or before 31st March each year, which covers the previous year's income. Filing is mandatory. Filing is mandatory, even for employees under payee, like we mentioned earlier, and it's done online via state portals like Lagos State e-tax. We will illustrate and elucidate with the Federal Capital Internal Revenue Service and Lagos Internal Revenue Service. There are 9 steps for annual income tax done in FCT under the FCT IRS. The first step is visit the FCT IRS self-service portal, which is fctataxportal.fctrs.gov.ng/service/account/sign in. Step 2, enter your payer ID and password to login. Step 2, enter your payer ID and password to login. Step 3, click on the register button in case you are here to register for the self-service. Step 4, click on the menu button and select tax returns. Step 5, on the tax returns, click on the file returns. Step 6, click on file a new return button. Step 7, on the new return page, enter assessment date and assessment year and click on generate returns reference number button. Step 8, on the assessment page, enter the required information on parts A, B, C, and D. And finally, step 9, submit your filing for approval and you are done. That's very simple, right? Now for Lagos State, there are 8 steps for annual income tax return in Lagos State. First one is access the portal. Visit etax.lirs.net. Log in as an existing user. Log in with your taxpayer ID and password if you are an existing user. Step 3, click on as a new user. Click on sign up if you are a new user. Navigate to returns. Select the corporate returns or personal income tax section depending on your status. Step 5, download the templates. Download the necessary templates for annual returns like Form A, including schedules for payee, withholding tax, and projections. Step 6, fill and upload. Complete the Excel templates carefully. Do not edit headers and upload them to the portal. Step 7, submit. Preview your uploads, confirm details, and then click submit. Step 8, confirmation. Download the agreement receipt for your records. Now, some tips on how you can file tax returns effectively and efficiently. Please pay more attention. Know your tax law well, as usual. Register timely and correctly. Know your tax law that relates to filing of tax returns. Know your filing legal status. Know your relevant tax authority. Please pay close attention to your tax forms. You have to fill correctly. From A, from H1, from G. Your withholding tax schedules, please fill them correctly. Be proactive, plan your tax matters ahead. Clearly understand the law, its requirement, methodologies, timeline. Plan all year and not just tax time. It is very important that you pay attention on how to file your tax returns. It is very easy. All you need is paying attention, being attentive at the point you are filling the forms. And like we gave you a list of the documents that you are supposed to provide, please ensure you have this document before you start filling the form so that you don't go forth and back. Most importantly, consult and stay with Tax Corp for all your tax matters. Now, here is the list of the 22 interdependent compasses. This has been expanded now, so all you need to do is to go through it and select the tax subject that you want and go to either YouTube or our YouTube channel or Facebook or TikTok and watch it, and you would have solved your problem. And please, should you desire any more videos or you don't understand clearly any particular one, let us know. We want to hear from you. You can drop your comments in the comment section or you can reach us through any of the channels that will show you here. About Tax Corp and the principal consultant. Tax Corp is a Nigerian tax consultancy firm which specializes in tax matters. Prince Chid, FCA, FCTA, MBA is a principal consultant. Prince Chid is a licensed fellow of the Institute of Chartered Accountants of Nigeria. Is also a licensed fellow of the Chartered Institute of Taxation of Nigeria. Tax Corp and Prince Chid have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally, since 1990. The beneficiaries include the Nigerian Revenue Service, which was formerly Federal Inland Revenue Service (FRS), Revenue Mobilization, Allocation and Fiscal Commission (RAMFAC), State Internal Revenue Services, Federal Capital Territory Internal Revenue Service (FCTRS), and many private companies and individuals. Dear friend, here are the channels that you can use to contact us if you have any issue. And like we said, we want to hear from you to see how this particular project is helping you. Thank you so much. Have a nice day.